Yeah, quarterly theory is a really powerful concept, and I'm actually going to show you guys how you can use some optimizations to go from results like this to something like this, just by adding some more high time frame confluences. So yeah, thanks everyone for joining today. For those of you that weren't able to join Friday, I went over kind of this similar quarterly theory concepts applied specifically to, we were looking at Forex during London session. And not surprisingly, the same strategy can work well for indices in New York session. And just a little background before I get too far into it. Trader Day is a guy that studied directly from ICT and actually took his private mentorship in 2024. He has a lot of pretty kind of out there theories and stuff like that. But one of the things that is really powerful is his concept of quarterly theory and how you can use it to kind of combine the concept of time as well as price. So we're going to go over this strategy of quarterly theory today and a simple kind of low time frame execution strategy that I've been able to develop with it and start doing some testing. And then I'm also pretty excited to share with you guys today. I basically started out doing some very initial testing with this, just taking pretty much every single trade that I could find. And, had a pretty solid base model with this, pretty decent equity curve. I think I was able to get 30R in a couple months, which is really good as a base model. And then I want to show you guys, today I'm actually going to go a little advanced and show you guys how I was able to take that initial model and turn it into this. So same exact time period, but starting to apply some optimizations in terms of trying to filter out trades that are maybe against the trend or against the higher time frame SMT divergence. So I'm going to show you guys a lot today. So hopefully we'll be able to cover it all. But as usual, if you guys have any questions at any points, feel free to reach out in the chats. I want to make this interactive as possible. And I'm also going to quiz you guys a little bit to see if you're paying attention. So what is quarterly theory? I shared the strategy PDF like I mentioned. If you guys are watching this on YouTube later, it's in the description. But basically, all you need to know with quarterly theory is that he kind of breaks up time into quarters, starting from a year. A year is obviously 4 quarters with 3 months each, all the way down to every session of the day being kind of 6 hours, and then there's 90 minutes. Four 90-minute quarters makes up a 6 hour, and then you can go even lower than that. So with all of these quarters, the biggest thing you want to think about without getting overwhelmed with it is we want to look for SMT divergence to happen between 2 consecutive quarters. So for those of you that aren't super familiar with SMT divergence, all it is kind of what he calls a crack in the correlation between 2 highly correlated assets. So for bullish SMT, maybe one of them puts in a higher low, one of them puts in a lower low. Or for bearish SMT, one of them puts in a lower high, one of them puts a higher high. And this can be a pretty strong confluence that there's a potential reversal coming. So this is kind of the core concept of SMT. And then he takes it one step further, calling a sequential SMT, SSMT, which basically takes place between 2 consecutive quarters. So that's what we're going to be looking for today for the most part. There's also an important concept called precision swing points I want to just go over briefly before we get into the strategy details. And all it is basically is after you see that SMT divergence, if you see a kind of swing point reversal candle, that's a different color between the 2 pairs. That's kind of something he refers to as a precision swing point. That can be additional confluence, the reversals happening. So we'll be looking for those as well for one of the 2 specific entry models. So just kind of a couple educational things. And then the strategy PDF, I tried to add some stuff to it since Friday to make it a little more flexible, whether you're trading this in London session with Forex or New York session with indices. If you're trading in London, which I went over on Friday, you're going to want to make sure and use a low spread broker. I think IC Markets and Pepperstone are a couple good options for that because you're going to need low spreads to trade this effectively in Forex. But for indices, futures obviously have super tight spreads. So I recommend trading futures if you're going to trade this 5-minute strategy on futures. But you could also consider using some higher time frame candles and quarters as well that we'll look at in a little bit. So how to visualize this? Quarterly theory can be a little complicated, but I think the easiest way to understand it is to visualize it. And so I talk about this quarterly cycles indicator by Waffles BTC. If you go to TradingView, it's literally just quarterly cycles days theory by Waffles BTC. and it really helps you visualize kind of the different quarters in nice little boxes. So you can see here I'm on the 5-minute time frame here, ES on the right, on the left, NQ on the right, and these like larger boxes are kind of every 6 hours. So these are kind of the sessions that he talks about. And then within each of them, you can see each of the 90-minute quarters. So it's really easy to like visualize all the different quarters. And so I was playing around with it, and I was actually able to duplicate this pretty well within FX Replay. I'll just pull up a chart to show you guys kind of what it looks like. Let's go into really any of these. Just pop this one open. So I was able to basically duplicate this indicator for the most part within FX Replay by using the custom session indicator, where I have basically every 90-minute quarter as kind of these custom sessions. So for New York session, I can kind of see each of these different 90-minute quarters, and then I used the session indicator New York by FX Replay to get at least 3 of the 4 6-hour sessions. You can kind of see them overlapping with each other, and I have these specific settings in the strategy PDF, whether you're trading London session or whether you're trading New York session. But the really only thing to note is for the sessions, all I did was basically come into the style tab and I turned off the backgrounds. I basically put the opacity to 0 on these, and I actually brightened up the border a little bit so it's a little more visible. So you get this nice kind of just border on the outside and then have the 90-minute quarters inside. So basically I was able to duplicate this quarterly theory indicator just using a couple things within FX Replay. Most of the time, if you get a little creative, you can often duplicate stuff in TradingView, even if we don't have that exact indicator. So now that we've gone over that, what are we going to look for specifically with this strategy? And so, like I said, I've been focusing specifically on these 90-minute quarters, and so I want to look for sequential SMT between 2 90-minute quarters, and we'll look at a few examples, and it's surprisingly easy to just look for a few examples, actually. So, yeah, let me just look at a couple examples. I went over this in more detail last week too, so if you need to watch the video where I go a little slower through the PDF, that might be helpful too. But last week we were looking at EU and GU, but same strategy for indices, the ES and NQ. So all we're looking for is basically SMT between these quarters. So you can see here, GU made a higher high, whereas EU made a lower high. So we have that bearish SMT, and this is a case where we had that precision swing point. So after we saw a green candle here, red candle here, this is actually one of the 2 entry triggers we're going to look for. And in terms of which pair to enter, you want to think of like which is the higher probability pair to continue running to my target. So if you're looking for a short, you want to see basically whichever pair didn't sweep the high is going to be the higher probability pair, because we basically have some relative weakness on EU in this case, so it's more likely to continue to the downside versus GU that's actually made a higher high here. And same thing for a long. If we have bullish SMT, the other entry trigger we're going to look at is engulfing candles. So there wasn't a precision swing point, but we had a pretty close to engulfing candle. You can use a tiny bit of discretion. If it's super close to being engulfing, you can include those as well. But those are the 2 things we're going to look for: the SMT in conjunction with a precision swing point or an engulfing candle. And those are going to be our entries, targeting about 3R. I believe for EU and GU, I was using like a minimum stop of 5 pips, but with futures, you can just use the kind of recent SMT lows. You don't need to extend it any far beyond that because, you know, they have super tight spreads. So a couple more examples. We have some bullish SMT here with a precision swing point at this low, green candle here, red candle here. So this is our entry. Again, for last week, I was using a 5 pip stop loss on EU and GU, but you would just use this low if this was futures, targeting out 3R. And then same thing here. We had bearish SMT between these 90-minute quarters and saw an engulfing candle on GU, took the entry after the engulfing candle with the stop at the kind of recent high and targeted out 3R. And this shows you like why it's important to trade the right pair. So the one that doesn't sweep the high is going to have like a higher probability of going to your take profits, whereas this one kind of continued to the upside actually. So those are some examples. I'll go over a few additional invalidations that I was seeing. So if you're trading in London session, you want to pretty much avoid the pre-market New York news, which is usually around 8:30. If you're trading New York session, like obviously, you know, don't trade right in front of like FOMC or something. But I really wasn't caring too much about a lot of the like 10 a.m. Eastern news or stuff like that for most of these. That usually kind of works out for you. But don't try to take a trade like right at New York Open unless you're really confident in the bias. And then these comments are really just like helping identify higher probability conditions. So if one of them's moving like in an uptrend and one of us is moving in a downtrend, that's something Trader Day says is just like low probability conditions. So we'll avoid trades when that's happening. And then same thing if there's conflicting sequential SMT and you're not using any kind of high time frame help to like identify where the price is likely to go, you probably want to avoid those. And then last thing, last week I was noticing if we had some relative equal lows or relative equal highs, like just past our stop loss, a lot of times those ended up being losses. So this is a new rule that I added since last week. We're going to avoid trades where there's basically a draw on liquidity like just past our stop, because it's most likely gonna be a loss. So went over a lot there. Again, let me know if you guys have any questions, but I really want to start by showing you guys kind of how I was able to start doing some optimizations with like kind of incorporating some higher time frame analysis, and then we're going to do some live backtesting as well. And I want to spend as much time as I can really going over the details with you guys. So I think this is the one I want. Yeah, this is the optimized one. So I'm going to go to, what did I say? March 28th of 2024. Sorry, this is 2023. There's a couple of periods I want to show you guys with this. So it's March 28th, around there. I want to show you guys a few different periods of time that, and show you guys kind of how I was able to filter out some trades. So when we think about how do we maybe, try and make it a little more likely that we're going to, have the trades run to our take profits. Let me see if I can move this over a little bit so my face is on the screen. Yeah, that probably works. So when I was trading this, like kind of just every single trade I found last week, I wasn't taking into account any kind of high time frame bias. I was literally just looking for every single 90-minute SSMT and taking those trades, and it was a pretty good base model, about 45% win rate. 3R, it was profitable, but I personally would like to see that over 50%. So I was trying to think, how can I optimize that? And one of the best ways to do that with this strategy specifically is to incorporate the session or daily SMT as well. So in addition to just comparing these kind of 90-minute quarters, let's compare these 6-hour quarters as well to see if we can get any insights on what we might want to additionally look for. And so kind of as I'm coming into these days, this is a good example of where there were some relative equal lows. So I wouldn't have wanted to take any longs here until this was taken out. But after that was taken, we kind of just trended to the downside. So really, there weren't any trades on this first day. Let me kind of go to the next day and see what we had here. So when you're thinking about how can we kind of combine high time frame and low time frame kind of bias, there's really two things that I tried to look for. Number one, are there any recent session SMTs that I can kind of use as, okay, like that was the last, there was a bullish one or a bearish one that's going to drive kind of the trend until I see, until proven otherwise. And then the second thing is really just helping identify like the overall trend. And so I think I'm coming into this day, we had a pretty large reversal at these lows here. Didn't really see anything super strong until actually, yeah. This is an example of kind of weekly SMT. So this is even larger than I'm going to focus on mostly today. But you can kind of see here on this chart on the right, NQ took out the previous week's low, whereas ES did not. So this is a super strong high time frame bullish SMT comparing like week to week. And so coming to this next day, I know, okay, there's a pretty good reason the price is just going to continue higher. I'm only interested in longs until I see something that tells me otherwise. And so kind of as I come into this next day, I'm only interested in longs. And so as I now kind of look for these SMT divergence trades, this is one where we might have had actually both. It did eventually take the high on the NQ, but not ES, but I was only interested in longs. So I took this kind of 3R long right here where we had a bullish SMT between these lows, and we had an engulfing candle for the entry right here. So a simple market entry here, using the recent low as the stop loss and targeted out 3R. Could have wrote it for a lot more, but just for the base model, I'm just doing simple 3R. Take profits for now. You can optimize it more in the future. Took us a couple times. We did have another case here where we had a bearish SMT between these two kind of 90-minute cycles, and I was trading NQ because it was showing relative strength. And the first one stopped me out. There was a precision swing point with this green candle here versus red candle here. That one stopped me out, but then the second time when I had an engulfing candle, that one worked out nicely. And this is something you can kind of play around with. I think when I was first testing this, I was maybe saying like, I don't know, if NQ is like less than 40 pips or something, maybe I'll just use the SMT invalidation as my stop, but you can just use the recent low for pretty much all of these. I think with NQ, like the spreads are so small with features that it works out. So there's actually like 3 wins and a loss on this first day, which is a lot more than usual. So we had one final one here where we had bullish SMT, a higher low on NQ, a lower low on ES, followed by an engulfing candle. So we entered here at a market order, stop at the low and targeted out 3R. So I think this was like 8R we collected in this first day just by properly identifying the trend and not really being interested in any shorts, even if they were to present themselves. So coming to the next day here, there's really nothing else indicating to me that we should go short here. So I'm assuming kind of coming to this next day, okay, we're only looking for longs, even though there actually were some potential shorts on this day. I didn't take them because I knew I was only really interested in longs. Didn't have any triggers to properly enter me into this first one, so I just didn't take any trades there. And yeah, like I said, saved us from a couple losses this day where we did have bearish SMTs present, but I knew the overall trend was bullish and there wasn't any session or daily SMT to kind of tell me otherwise. And so I eliminated those shorts and kind of saved myself from those losses. So there weren't any trades, but identifying filtering out like the right direction like helped me save me from a couple losses this day. So I'll quiz you guys here. What do you see in this chart here between NQ on the right and ES on the left, kind of coming into New York session? If you were to try and think, okay, I'm coming to this new day, what information do I have available to me to maybe help see if I want to be looking for longs or shorts? So we got a couple different answers. So we got one vote for potential shorts. Somebody says there's a SMT at the bottom. And somebody says whatever that guy says. So I would say Fuego. You had Maddie, you're obviously right, some type of SMT. Yeah, we have bullish SMT here between these two sessions. So between this 6-hour session and this next one, you can see ES did not take out the low, whereas NQ did. So this is going to give us additional confluence. Okay, we're only interested in longs, given that we have somewhat of a higher time frame SMT divergence. As we came into the session a little bit later, there was potential bearish SMT. So I would say, DigiCap, maybe you were also correct. We did also have some, so I'll mark these out so you guys can see them clearly. So we had some bullish SMT here at these lows, kind of at this point in time. NQ had taken out this previous session low and ES did not. And then a little later in the session, we also had potential bearish SMT. And I say potential for an important reason, like it could be invalidated over time. But at this point in time, we did also have bearish session and SMT. And since SSMT can cancel each other out, like at this point, I would have been like, okay, I'm open to shorts if one presents itself. But a little later on, we can see this was invalidated by NQ also taking out the high. So I kind of flipped back, okay, the most recent kind of high time frame SMT was this bullish one. The other one's been invalidated. I'm back to only looking for longs. And ultimately, there was only one trade on this day. Kind of came later in the session. I'll zoom in a little bit so you guys can see. We had ES take out this low, NQ did not. And yeah, we had a precision swing point, kind of reversal candles in each of these. I think, yeah, this is a case where I did end up using the invalidation as a stop. Otherwise, it would have been a really tight stop on NQ. You guys can play around with it if you want. I don't think it's super important. Would have been a loss, but potentially could have had another attempt at it if we had another trigger, but had another win, kind of taking this high time frame bias into account. So I see a question, and then we'll kind of take a look the next day. Let me just get to where we want to real quick. All right, so I got a question in the chat. So when a bearish or bullish SMT is formed, how do you know which asset to enter on? So I go over this in the strategy PDF. I kind of skimmed over it because I don't want to spend too much time on it. But really what you would want to think about is what is the higher probability pair to continue in the direction that I'm hoping to trade in. And so as you can think of it, like if you have bullish SMT, right, you want to trade the relatively stronger pair, right? And that's the one that basically makes a higher low. And so if you look at this kind of earlier chart I have right here, between these two charts on the left, which one is showing relative strength? Asset one. Yep. Because it made a higher low, whereas this one made a lower low. And then same thing on the right. Which of these is showing relative weakness? Yep, asset one. So the one that made a lower high is the one where you'll be interested for bearish SMT. And so I think like if you want a very like simple rule of thumb, you basically trade the one that didn't take the sweep the level. Like in this case, you trade the one that made a higher low. In this one, you trade the one that made the lower high. So whichever one takes out the kind of higher low, you want to trade the other one, if that's a helpful way to think about it. And this is specific to like the low time frame entries. We use the higher time frame, like the session SMT for context, but we're still entering using these 90-minute quarters. So we're going to be using kind of the 90-minute quarters to determine which of these to enter on. So that's a great question. Let's go back to the charts. So basically, when I came into the next day, I started out by zooming out a little bit and kind of analyzing not only like the recent two sessions to each other, but also like what was the high and low of the previous day? Do I have any info on that? And so coming to this day, I kind of realized, okay, ES is kind of near this high. There could be a little later in the session some bearish SMT if ES takes out Friday's high and NQ doesn't. It's just kind of something I'm seeing, but otherwise, like we're still in a nice uptrend. The most recent intact session SMT was this one down here. So I'm still like looking long until I, see some other information otherwise. And this is also a good case here. And I'll kind of show you guys kind of coming into New York session what it looked like. We had a bullish SMT again, right? Between these two sessions. NQ took out this session low, ES did not. So again, once again, we have further support that we want to look for long. So I passed on this short. We had a short potential opportunity early in the, I guess this was actually before New York Open, so I would have taken this anyways. I was doing a little testing pre-market and just don't trade until after New York Open because it's just a huge injection of like liquidity and volatility. You're going to lose more trades than not if you trade kind of before New York Open. So I wouldn't have taken this anyways. But additionally, I wasn't looking for shorts because of the higher time frame analysis. And then this is kind of where that initial thought I had before the market came into play. So we had now daily SMT, where this is the previous, I guess technically week's high, but also like Friday to a Monday is kind of the daily quarterly comparison. ES took out the high and NQ did not. So we have a very high time frame bearish SMT. Okay, now I'm like, all right, like I'm only looking for shorts now. And we had some very subtle 90-minute SMT as well. It's kind of hard to see, but this is why I think the indicator is helpful to actually visualize these, because if you didn't have these blocks on the chart, it might be hard to see, but we had a slightly higher high on ES and a slightly lower high on NQ, and I think this was also a PSP, green candle on NQ, red candle on ES. We traded the relatively weaker one, and you could have rode this for a lot. Like if you have that high time frame, SMT as well, these trades can run significantly. So there's going to be a lot of opportunity to try to hold the winners longer with take profit optimizations. Maybe look for other, session lows, or just honestly try to test out some of the different trailing stop losses that I go over in the video. But cut a really nice short at the top here, kind of taking into account that high time frame SMT in addition to low time frame. So let me see. I think this was the last one on this day. Again, just showing you guys some relative equal lows here. I wouldn't have been interested in longs given the kind of high time frame bearish sentiment, but if we would have had a trigger here, this isn't long. I wouldn't have wanted to take because of these relative equal lows, if that makes sense. So I want to jump now a little further ahead. I think May 4th was the next kind of section I wanted to show you guys. few trades. So we'll do kind of the same thing, and I will do some live backtesting here in a little bit. I just think this is probably the most helpful way for you guys to visualize how to filter these trades out by actually showing you kind of what I did. So hopefully this is helpful. So coming into this day, really I think the biggest thing I noticed was we had some big displacement to the downside, actually kind of overnight. So we're in a pretty clear high time frame downtrend. There isn't really any super significant high time frame SMT that I'm seeing, but overall just kind of following the trend. And so again, kind of following the trend either on a high time frame or what was the most recent SMT until proven otherwise. Like if I see bullish session SMT, okay, I switch, and now I'm looking for longs. But in this case, I was looking for shorts. We did have a little bit going on this day, so this is a good one to analyze. So overall, I was bearish to start the day, and then there was a short that presented, so I was happy to take this one given my kind of high time frame trend. And then a little bit later in the day, about noon, we actually formed some bullish SMT between these two sessions. And honestly, like if this happens, it might be good to just like close the trade. You really don't want to fight these higher time frame SMTs. So you wouldn't have gotten the full 3R, but you probably could close this one a little early and caught 1.5, 2R or so. There wasn't actually a trigger from this one. We didn't have the PSP or engulfing candle, so I wasn't able to take this long. But then later in the session, we had SMT canceling itself once again, where NQ and took out this high from a previous session, whereas ES did not. So you really have to be flexible with your bias. And I think that's like one of the best things about this is like it's telling you, which trades to take instead of just like coming into a day and like for the whole day forcing like I'm only taking shorts. I think it's better to be a little more flexible with your bias, and like this helps give you information on when to do that. That if they cancel, they can cancel each other out. So we had bullish SMT, now we had bearish SMT. Okay, as long as this is valid, I'm only looking for shorts now. And same thing, we had very slight, hard to see a little bit, but higher high on NQ, lower high on ES, super close to an engulfing candle. I would probably take this and cut a nice 3R with this one. So that was a lot going on that day, but hopefully it helped kind of show what we're looking for. Put this back to auto. I like to use this auto feature as well. I haven't really used it a lot in the past, but it helps you like kind of keep the charts where you need to be. So okay, coming to this next day, this is going to be a little bit of a trick question for you guys, but we had both bearish and bullish SMT on the previous day. The most recent one had been bearish, but coming into New York session, now that price has basically coming to New York session, we were actually like all the way up here. Somewhere around here on both of these. What is the most recent higher time frame SMT that is still valid at this point? Is it bullish or bearish? Fuego says bullish. Yep. So SMT is valid until it's not. And in this case, we had this kind of previous high that ES had not taken out until the next day. So now this bearish SMT is no longer valid, but we still have this lower one that's intact. NQ never came out and took out this low. So coming into this day, I'm only interested in longs. So again, this was pre-market, so I also wouldn't have taken it for that reason, but would have been interested in any shorts here. And there was a long a little later in the day. This is a good one to zoom in a little bit to show you guys the concept of relative equal lows and highs. So we had a slightly lower low on ES, whereas NQ had not taken out this 90-minute low, but we had some relative equal lows here. Tried to sweep a little bit, but didn't really like confidently sweep it. So I was, I actually like for the, I've learned to like watch for this quite a lot because I got stopped out a lot when I didn't used to do this. It didn't really like convincingly sweep this low, so I was still continuing like I still don't want to take it. Like I feel like it hasn't really swept that low. So then finally we had a candle that actually like pretty much took out all these lows, and we still had this bullish SMT in place, and then we had our nice engulfing candle. So I actually waited to take this one until here. You could have maybe I don't know if there was actually an entry. I don't think you would have had an entry regardless if you started looking after here. But even if you had to take a couple attempts, you still would have caught 2R if you had a loss on the first one. But I think it's helpful to add that additional confluence. Like, don't trade against relative equal lows and highs. They usually have to get swept before price will continue. So that's the analysis for that day. A couple more days, and then we'll jump into some live charts together. So let's see what we got here. It looks like kind of same thing that we saw previously. ES is pretty close to this high, hasn't taken it yet. NQ's a little further away, so I want to be mindful of potential bearish SMT later in the day. And if you guys want, like, you can just kind of use drawing tools to maybe just draw out these levels if you want to test, just like so you have them visible with an efforts replay. That's probably like what I would do, just to, like, mark them out so you're aware of them, kind of go into the next day. So I didn't mark it, but there's bearish SMT right here between these two sessions. So this ES took this high and NQ did not, sorry. So this is why I took this trade. So we had some bearish SMT coming into the session, and so I wouldn't have taken this long, but I would have taken this short, and that's what I did. So we caught a nice short here, and then a little later in the session, we also had some bearish SMT, both on the daily time frame and per session. So at this point, I was only interested in shorts, which may have influenced the next day. So yeah, most recent SMT is this daily plus session bearish SMT. So I'm only interested in shorts unless I see something otherwise coming into the next day. And I think that just led me to take potential. Let me see. Yeah, this is a good case where you have to be flexible. So starting the day, I was only interested in longs. Only interested in shorts. So I didn't take this initial short or long that presented here. But then a little later in the day, we had some bullish SMT between sessions where ES did not take out this low, but NQ didn't. So again, I'm flexible with my my bias, and now I'm like, okay, we have some bullish SMT. I'm open to longs, and this led me to pass on this short. And so just by like filtering, kind of being flexible with my bias, I saved myself from 2 losses this day that I would have taken otherwise when I was just taking every single trade. So I know this can be confusing and it's going to take some practice. I encourage you guys to maybe watch this back, or like feel free to ask in the chat if you're like, hey, like, why did you take this, or what would you have taken this day? We don't have too much time. I can maybe go a little over the hour if we want today, but somebody in the chat give me a day and a month, maybe in the last couple years, and we'll test like on the fly a little bit. April 2024, what day? April 5th. All right, that's a Friday. So we'll drop the time. Let's just start it the day before, just so we don't have to worry about the times. Let's go right there. All right. So we'll get through at least like a couple days. I don't know how much we'll get through. So create the session. I'm going to add the strategy so I can just filter on all of these a little bit later. Let me make sure I save that actually. Save. And I'll pull this open. And we'll see how much we can get through. In the rest of the stream. So I'm probably gonna make a clean layout so I can just like delete all my drawings, make sure it's more efficient. So I'll just make a copy of this previous one and say this is for my stream. Save it. So I got a specific layout to this session. I'm gonna just delete all my other drawing tools, make the chart kind of clean up a little bit for both of these. Okay, so we got just the indicators, no drawings. Chart should be good to go. So yeah, let's kind of look at what we're seeing on these charts. So overall, pretty bullish, right? Like moving to the upside. We don't have any bearish SMT on the high time frame, so kind of same thing as we saw last time. I'm really only looking for longs, kind of coming into this. And so one of the nice things, even though this can be like, if you're trading all New York session, it's a lot of chart time. If you're only looking for longs, like every 90 minutes, you can just set an alert like at these the previous 90-minute lows and just wait to see. Obviously with backtesting, you got to watch it. But if you're trading this like live, you could set some price alerts on both of these, like at these lows. And I would also recommend setting alerts at maybe if there's daily highs or lows that you're interested in, or every 6 hours. Maybe like set some alerts at the highs and lows of the sessions as well. But use the price alerts to your advantage, so you can maybe like limit the amount of chart time that you have to have. You don't have to watch all these 5-minute candles for 8 hours every day. So coming into, I'm looking for longs. We haven't quite swept the low on either of these yet. All right, both of them took the low. So wait for the next 90 minutes. We have now some potential bearish SMT. ES took this high, NQ did not. I've been testing this a lot, so I can see these pretty quickly. Your eyes will get trained a little bit over time. All right, it's not like a perfect PSP, so the best precision swing points are at these actual like swing highs and swing lows. That's like the main ones that Trader Day would talked about. When I've been testing, like you could consider using these kind of nearby like reversal candles as well. We'll give this one a shot because it's a green candle here, red candle here. It's kind of an indecisive candle. So I'll give this one a shot, but I would say you're definitely going to have higher probability if you stick to just like these kind of candles that form these swing highs and lows. So it's not actually the same candle, but say that this red candle over here lined up with this kind of green doji over here, that would be a better precision swing point if it was actually like the one that formed the swing high and low. But I'll give it a shot regardless. The only thing to think here, I was jumping ahead of myself. We don't have 90-minute SMT yet. So between these highs, like both of them took out this red high. So we don't actually have the 90-minute SMT required yet. That's going to be important to wait for alignment on the higher time frame and lower time frame. We might just miss this trade, which is also fine. Could be a good example for you guys. So prices started to move to the downside. I'm only interested in shorts as long as this bearish SMT is intact. So even if we have kind of a low time frame short or long here, I wouldn't take it. And so I'm really glad we saw this. So this is a great example where we never had a example in the 5-minute time frame. We never got the kind of bearish SMT between these consecutive 90-minute cycles. However, on the 15-minute time frame, you could use these sessions in conjunction with like the 15-minute candles and potentially look for entries on that. I don't know if you would have had any. So this is the PSP right here. So we had a green doji on NQ and like a red one on ES. So I probably, if I was trading this on a 15-minute time frame, I would have kind of put my entry after this 15-minute PSP, and you could have gotten much more than 3R on it. So kind of shows you you can use additional 15-minute candles if you're seeing SMT. If you like, some people could maybe you only want to trade 15-minute candles, you don't want to watch every 5-minute candle. That's also fine too. You could also trade this with 15-minute candles using just the session highs, but I've been trying to use both so I can get a little more trade frequency. So this is a good example where 15-minute would have given us a trade, but we didn't have any on the 5 minutes. So let's see, we're pretty close to the end of the day, and we just totally roll over after that. So if you caught the 15-minute, you probably just could have carried it out through the end of the day. So let's go to the next day. I didn't take any trades, but hopefully that's still helpful. What do we have now? Okay, huge downtrend. I'm definitely only taking shorts. Let me say caveat that real quick. Okay, so couple conflicting things here. Trend is obviously overall bearish, right? But generally things don't go like straight up or straight down. Like we're probably going to need to come back and fill some of this before we can continue lower. And so one of the things I'm seeing, you actually kind of have to compare the this is the previous day's kind of low down here. We swept these lows on NQ. I'll just draw it so you guys can see a little better. It's pretty close though. Like it barely swept it. I'll have to zoom in. And then we did not on ES. So I would be open to some longs. I think overall, like, prefer shorts, but we have some potential kind of higher time frame bearish SMT, so I'm open to either. And I'll probably start the day looking for longs unless like we see a reason to only look for shorts again. Like if one of these had taken the high, or sorry, this is 90 minutes, not sessions. So I'll look for longs specifically because of this higher time frame low price action. So both swept the highs. Yeah, I didn't get any entry triggers, but the bias was correct, right? Like at the end of the day, that's the main thing. You want to try and like trade the right direction. So another good thing, even though we didn't take any trades, is even if you don't specifically like these types of trades, just using this to help like your directional bias can be super powerful by itself. Like maybe you won't like trade orb, the opening range break, and okay, like I'm looking for longs. Like that can give you a bias to have a higher probability. Or we had a I don't even know, there was a kind of unicorn model, a little pre-market. We swept this low, broke this high. Now we had a breaker and a fair value gap. Like you could potentially trade a kind of limit order unicorn model entry up here, aligning with the higher time frame trend. So you can use the same kind of methodology with whatever models you guys want to trade. Maybe you have continuation models as well, and like this can give you a reason to like continue to hold them until you see bearish SMT, at which point you might want to like close the trade. So there's a lot of different reasons you can use this to help you like hold the trades longer, help you identify your directional bias, whether you use these specific entry models or not. So still only looking for longs. Both of these sessions, this new 6-hour session, the highs have been swept. So I'm only interested in longs still. Both of they're super in sync. So there may just not be any trades this day. That's fine. Yeah, pretty much at the end of the day here. I really don't like to take anything like after like 30 minutes before you have to close futures. So I probably stop trading after like 15:30. We're in a pretty clear downtrend. Maybe I only want to take shorts at this point. So let's see if we can have something here. Red, green, red, green. Okay. I'm gonna take this if I can get a trade opportunity. All right. I don't know. It's probably gonna be a loss, but I'm just gonna take it just so we say we took something. They're not like exactly relative equal highs, but so ES did not take, or ES took the high. NQ is really close, but has not quite yet. So this is gonna be a super tight stop loss. But we have a potential PSP here. Oops. I use the stop at the high. 3R is gonna be like super quick if it hits. So just to show you guys how I would kind of mark this out. So somewhat of a reversal candle on each of these. It's not, again, the exact swing point candle, so maybe a slightly lower probability, but you know, could probably take these. And so I'll show you the tags. This is something I actually should have gone over a little earlier. So in kind of thinking about this high time frame framework, I've still been using entry trigger 1 for the engulfing triggers, entry trigger 2 for the precision swing points, but I've also added these like factors. And factor number 1 has been like, okay, this trade also has like bullish or bearish session SMT at the exact same time. So it's like, you know, I'm trying to think of just a visual for you guys. So if this high and this high also aligned with like some bearish session SMT like at the same time, then I would use like factor number 1 for that case. And factor number 2 I was using basically for anything that like seems to be like following the recent trend. So this would be one I would classify this. And we're saying this is a precision swing points, entry 2. Probably going to be a loss. Hey, there we go. We got to win. Like I've started using SMT divergence like with this framework, and I really like visualizing it in this way. I think it makes it a lot easier to see. And so I more often use SMT divergence as a confluence now within most of my trading, and it just helps me improve my win rate. You know, looking at those things. I think in the strategy PDF, I also mentioned these new week opening gaps, new daily opening gaps are also some confluences that he likes to use with some of the strategies. So that could also be something if you're trying to optimize. So this was my initial, just like taking every single trade that I saw on the 90 minutes, kind of like I did last week. It's still profitable. Like this is a great base model, 40% at 3R. Like I'm not complaining about that, but I personally like to get that over 50% because otherwise your loss streaks can be pretty significant. So just by optimizing this to add that kind of high time frame bias, I think I also deleted some New York Open trades. So there's a couple of different things going on in this one, but I was able to basically test the same period and get the win rate up to over 60%. For this, taking about half as many trades, which is, yeah, really good. And I think I've tested it on one additional month so far. So again, it's not the hugest sample size, but I've tested, I think, 3 months initially here, and then another month, or maybe a couple months here. I've tested about maybe three, and we only took one trade from the live testing today because I showed you guys those earlier examples. But we've got 36 trades over, you know, a little over 30, over, you know, 3 months of data, had a 60% win rate. You know, we were using roughly 3R, take profits, but again, I think there's a really good opportunity to potentially optimize this to see if you can trail those stops a little bigger, hold those winners a little longer. You can see here the average risk to reward was pretty high, and I'll show you guys a little bit of a difference using the tags we looked at. So I don't think there was a huge difference between the engulfing triggers versus the precision swing points. Actually, yeah, the engulfing triggers were a little bit lower, but still like pretty close to 50%. So precision swing points did have quite a bit higher win rate, about half the trades. So slightly higher win rate with the precision swing points. Not too super surprised with that. And then if we look at trades that had both 90-minute and session SMT, kind of at the same point when the trades were taken, those also had a slightly higher win rate, 65%, versus if I was just kind of following the kind of recent trends based on the SMT divergence and higher time frame analysis, it was still profitable, pretty good, but just a slightly lower win rate overall. Just to show you a little bit of insights from the different tags you can use. And then if I filter this on New York time zone right here, we can take a look and see the average duration of these was about an hour for winning trades, 49 minutes for a loss. We kind of had a slightly higher win streak than loss streak, which makes sense with the like 60% win rates. It does look like we had actually sells were more profitable in this period, maybe just due to the kind of market conditions when I was testing, but that's something you can kind of keep track of over time. The performance by session, interesting. This 11 o'clock window, kind of like lunch hour almost, was actually not profitable with this. So as you get a larger sample size, maybe you want to avoid trades kind of during the 11 o'clock hour, the 12 o'clock, and pretty much every other hour except the last hour of the day and 11 were profitable. But again, get this to a larger sample size to really get that information. And then same thing with day by day, pretty small sample size, but if this was after like 100, 200 trades, then maybe I would, see that Tuesdays and Thursdays have a little lower probability. Maybe I want to de-risk on those days, or really just or focus my efforts on Monday, Wednesday, Friday. But you really need the larger sample sizes to determine this for sure. I couldn't say this after 36 trades to confidently that Thursdays aren't going to be good. And then month to month, just kind of show you guys some of the returns we were to get. This is 1% is 1R essentially. So we had multiple double figure months. This one month we almost made 20R in the month. I think that we've only found one trade in April when I was testing with you guys. But overall, I think you can probably pretty consistently get 5, 10, some months even up to 15, 20R with this strategy. And that's without continuing to optimize the take profit. So it's definitely a promising model. I encourage you guys to test and further optimize. But yeah, that's it for the most part. I guess trades by month looks like we averaged 8 on average. There were some months that we had some more, some months we had less. So it really depends kind of month to month, but looks like maybe roughly 8 trades per month. And this is really, again, only taking into account the entry models we were using. As I'd mentioned, you could consider adding additional entry models with the kind of bias you have in mind, whether that's, unicorn model, opening range break, continuation models, all kinds of those. You could consider using the directional bias that we discussed today and fold in additional entry models with it, because that would definitely improve the profitability as well. But yeah, like I mentioned, I really enjoyed his private mentorship. Got a lot out of it, and I like to use SMT divergence quite a bit with my own trading now, mostly for additional confluence. But yeah, it just helps you kind of identify where the market's likely to head, or if this trade is higher probability or not, if you have that SMT divergence in your favor, and especially if it's sequential SMT. So hopefully you guys found this helpful, and hope you have a great rest of your week. I'll catch you later. See you everyone.